Alright, ladies and gentlemen, it's the Forex that is Zambia's finest bliss $1 billion. And of course, today we're going to move a step further and look at another form of support and resistance. And now we're going to look at diagonal support and resistance. Mainly use this concept when the market is trending. Yeah. So by diagonal support and resistance, I just mean trend lines. So basically, trend lines is just support and resistance. If you've heard about trend lines, of course you know. But maybe if you didn't know, it's just support and resistance, because how we spot support and resistance and how we spot trend lines is just the same, except that other one is horizontal, this one is diagonal. So without wasting much of the time, let's get started. So what is a trend line? A trend line is simply support and resistance which is drawn diagonally. So here's a picture to illustrate. So in a case where you have price moving in an uptrend or in a downtrend, you can actually spot turning points of the market by using a trend line. Remember, the key as a trader when you're trading is it's in your ability to spot turning points of the market, and those turning points become your points of interest. So as we can see, based on this trend line, price went and was respecting this trend line, and of course you would have had points to enter the market, to exit, and all that. So when we analyze the market like this using these diagonal lines, these are basically called trend lines, but they're support and resistance, right? So how to draw a proper and valid trend line? So there are two types of a trend line. There's the upward trend line as well as the downward trend line. So in order to draw trend lines like a pro, here is what you'll be looking for. Step one, identify the obvious highs or obvious lows. So the obvious highs and the obvious lows are the ones that you can easily see. So if you can see, I've circled this word obvious. So these are points that you can easily see in the market. Now I'll be able to show you properly. So step two, connect a minimum of 2 points. So if you've spotted the obvious highs, you connect the minimum of 1, 2, and then you draw the line continuous. Or if it's the lower trend line, you connect 1, 2 points and it goes just like that. So the level must be clear enough. Don't try to force a trend line. So let us look at a picture below. So we have price moving like this, and of course from here we attach it to second line, and then it goes. So you attach from point A to point 2, and then the line continues just like that. So for example, if we look at how the market is moving here, it's in a downtrend. And what are the obvious highs? So I can see this is an obvious high, this is an obvious high, all these are highs, and then this is an obvious low, it's an obvious low. So what you need is connect a line from here to there. So this is the line from here to there. And then we also have these ones that are inside. You can also try and connect them, but first of all, let's focus on the ones that are just outside. So we'll do the same thing even at the bottom here. So we connect from this point to that point. Now when connecting, we use the wicks of the candlestick in that region. What I mean is that you see here the wick is where we're starting the line from, and then it also touches another wick on this particular zone, right? So you extend the line. What it means is that when price comes back to this line, you take a buy. When price comes back to this line on the top, you take a sell. So the rule doesn't change. You sell at resistance and buy at support. This is support and resistance. So when price comes back at the bottom line, you buy. Price goes back to the top line, you sell. So what are the takeaway points? When you draw trend lines, they would usually fall into outer trend lines as well as inner trend lines. The outer trend lines are the ones that are more significant and are drawn on higher time frames. They show you the overall movement of the market, and then the inner trend lines are those that are smaller movements, usually on lower time frames, maybe 15 minutes time frame, 30 minutes time frame, right? But they are still significant. So when you look at this example, this trend line from here attaching to this one and going all the way, and then this one, so these two are outer trend lines. Then these ones inside, these are called inner trend lines. The ones that are most significant are the outer trend lines. So let's look at this good drawing. So we can see a trend line was drawn from there, touching this second point, and then it's extended. It was drawn from here, touching this second point, and it was extended. Now, what we are looking for is price to come and touch the trend line, we'll buy. When it touches the upper trend line, we'll sell. But you can see even here inside we have other trend lines. These trend lines, the inner trend lines, can help you take scalping trades, right? Or they can also help you identify the patterns. Now I'll be able to tell you more about patterns later on. They can also be used to confirm a trade on when it will be changing direction. So here the only thing that you are waiting for is price to either come and hit this trend line, you can buy, or hit this top trend line and then you can sell. So this shows us inner trend lines and outer trend lines, right? So rules for choosing trend lines. The most important is, first, look at the highs that you can easily see. Look at the lows that you can easily see. That way you know which ones to use when drawing a trend line. So for example, this one, and this one. So you just draw a line 1, 2, and then when the market comes on the third touch here, it will touch the trend line, and then this is where you buy from. Sometimes it may slightly go beyond. I mean, it happens, right? Because support resistance is not a line but a zone, right? So here, when it comes to the third touch, this is why you take your buy from, right? Yes. So are you able to spot the significant points, the lows? So I can see 1, 2, 3, 4. So let's see, 1, 2, 3, 4. So let's say there wasn't these 2 points, you only had this one. So you could have drawn a line like that, 1, 2, and then you extend the line. When price comes back to this point, immediately it touches the line, you take a trade. When it comes here, immediately it touches the line, you take a trade, right? Yes. So I'll teach you about confirming this type of trade later on. Right now, let's just focus on knowing how to draw these trend lines. I'm sure by now you are getting a hold of how to draw them, right? So here you can even draw inner trend lines. Here you could have drawn a trend line from here, touching here, and then you could have taken a trade here. See? So the third touch is usually where we take a trade from, right? Yes. So let me just now show you now how to draw a trend line on a live market. So I'll just give you one example. So let's say we start from, let's try to analyze this one. Let's start from H4. Let's try to analyze this one. This one is Euro USD. So if you've seen, we use both synthetic indices as well as currencies to trade. So I trade both. So this is currency pair, right? So we can see how the market moved from here. You can see this is, so it will touch the second part. If I try to touch it on the second part, you see how it goes like that. And then the lower trend line would also be, okay, I can see this one makes more sense. Okay, right. So I have drawn a trend line, right? So I could have been taking advantage of these points where it was touching. But if you see that the trend line, you know, the lines have gone beyond, what you normally do is, one, you can adjust and do that, right? Now it is in the range. So 1, 2, 3, 4, yeah, and then here you have a breakout, right? That is how you draw a trend line. But let's try and look at here. So we can see we have this point, we have this point, we also have this point. Which points are usually, you know, the ones that you can easily see. This one, you can see it. Then we also have this one, this is a major high. We also have this one, which is also a major high. And then we have this one, which is also a major high. Now, how do you draw a trend line? So you just start from here, one, you attach it to a second one, which is this one, right? Then from there, from here, you attach it to the second one, which is this one. So it gives you a trend line, right? Now, I want to talk about, I want to talk about patterns. This is a pattern that it has made. And of course, from the pattern, I was able to tell that it was going to go down, right? Yeah, so basically that is how you draw trend lines, right? Basically just that. Go and practice how to draw these trend lines. Let us now go to maybe a lower time frame and just be able to appreciate this, right? Okay, so when we look at how the market is moving here, we can see, are you able to draw trend lines here? It's not really making sense on how you can draw, but if you do this, you see, this is the part that we're focusing on. I can see major highs. I can see we have this one. We have this one. We have this one. We have this one, right? And we have this point. So if you had to draw a trend line, let's try to attach. So from there, the wick, you attach it to this second line. Boom. Now, when you attach it to this second line, you can see here, it went up, but it didn't change direction. So this one was violated. We can now move this one to this one. We now use this recent one as the second point, and then we can forget about this one. And then when it comes to these other ones, from there, you can, so you see, this is the second point, and then if we draw like that, we can see that here it was violated. So we forget about this second one, and then we choose this one. Now, what we have right now is a trend line. We have, from here, the analysis becomes easier. So from there, the market fell down and it went like that. So we're looking at it moving, and then when it comes here, we'll buy, and then maybe hopefully it will come here, and then if it breaks out, it will go up, or once it reaches here, it will reverse again. You see? So now what I can do here is my point of interest would be here and here. So regardless of where the market goes, I'll still take a trade. If it comes down here, I'll take a buy here at the trend line. If it comes up there, I'll take a sell on a trend line. Right? Very easy, very easy. You can also look at it from this perspective. You can say this one, I'll just draw how it was, like that, and then you can do this. Right? So yeah, you have almost the same points of interest. So if it comes here, I'll buy. If it comes here, I will sell. Right? Yeah, you see. So you've analyzed and you are waiting for the market to do its thing. So that is how you look at trend lines. If you do look at another one, let's look at another one. Let's look at maybe another one. Let's look at GBP USD. GBP USD. All right. So with GBP USD, we can see how price is moving. How is it moving? So we can see, what are you able to see? Any good highs that you're able to see. For me, I can get this one. From there, I can get this one. Right? And then I can also see this one. I can also see this one. Now, if I try to connect from here to there, right, then I can connect from there to there, right? So here I've come up with points of interest, and then I can also do this inner trend lines. I can do this and come up with an inner trend line. Let's say this one, we can say okay, not really. No, it's not working out. Okay, so sometimes you won't have inner trend lines. So what is the market doing? What are we waiting for in the market? So if we're waiting for the market to move, if it can move and then come this side, would take a sell, right? So what we're expecting is here. That's where the market would come. And when it comes here, now you can now take what we call a sell. Can take a sell here. Once it reaches on the trend line, you can sell there. So here, so you can sell from that particular point, and then when it comes here, you can now take a buy. So you're anticipating that price, when it touches this lower trend line, you'll be taking a buy. So you can now come and take a buy. buy here. Now, the reason why I'm doing this is because I want to put it in your mind that we buy at support and we sell at resistance. So basically, that is how you apply these trend lines when you're trading, right? And then what you mean by buying from here is that you're thinking the market has a high probability of now going up, right? And you can see how the market is moving, you see, like that. Very easy and very smooth, right? Yeah, okay, let's proceed, ladies and gentlemen. Now, there are times when a trend line gets violated. So now, what does it mean when a trend line gets violated? What it means is that a trend line can no longer work. How do you know that now this trend line won't be able to hold? It won't be able to work. So another word that we use for a trend line getting violated is intersection or a break. Or a break, right? Yeah. Okay. So a break of a trend line is when a trend line is broken and it cannot be used anymore, right? So when a trend line is broken, then we know it is now violated and can no longer be used right? That's the thing. So when a trend line is violated, we are saying it's a point where a trend line can no longer be used or it now becomes insignificant, right? As easy as that. When a trend line becomes insignificant, then we're saying it's been violated. Now, how do you know a trend line is violated? Now, there are three things you would look at to know a trend line has been violated. One, you look at the candlestick that intersected the trend line. Has it closed below or above that trend line? Then you look at the length of the candlestick, has the one that closed above or below. Then look at the H1 or H4. So now let me just show you what we mean. So let's say, let me just delete this. Let me also do this. Let me just hide this. So let's say you have drawn your trend lines. Let's say you've drawn your trend lines like this. You've drawn your trend lines like that. And after drawing your trend lines like that, price is moving like this, right? Price is moving like this. What we mean by a trend line being broken or intersected is when instead of it bouncing from here and going up, it goes beyond, right? So this right here is what we call a breakout or violation of a trend line. So that is what we call a breakout, ladies and gentlemen, or violation of a trend line. So meaning this trend line has been violated and cannot be used anymore, right? This is what we mean. But it's not every time that when this happens, then the trend line has been violated, because there are situations where you see something like that, and then when it just reaches here, it continues and it continues to obey. So in order for you not to get false signals, how do you now know that indeed this one is a true breakout or a fake breakout? How do you know that this is a true breakout or fake breakout? This is now what we are learning to say. You need to look at the candlestick that has intersected that trend line. Has it closed above or below the trend line? In this case, if a candlestick goes beyond this lower trend line, now has the candlestick closed below this trend line or above? If it has closed below this trend line, then it is a true breakout. If it has not closed below this trend line, then it's a false breakout. Another point that you can look at is the length of the candlestick that has closed below or above the trend line. Now look at the body of the candlestick. Is it big or small? If the body that is below this trend line, the one that closed below this trend line, is small, then it means it can be a fake breakout. But if the body is significantly big or larger, then it can be a true breakout, right? It can be considered as a true breakout, right? As easy as that. Now the other point is now where you use 2 time frames as a reference. For example, if you're on the 15-minute time frame and you see some sort of a breakout, you can now go to the 1 hour time frame or H4 time frame to confirm. Now you're going to the H1 or H4 time frame to confirm. What will you be confirming? What you actually be confirming is these 2 points. Check, has the candlestick also closed below a trend line on the H1 or H4? How is the size of the body? If it meets the criteria, then it is a true breakout, right? So let's continue. You may want to rewind and just rewatch the things. I don't want to rewind myself. I mean, I'm teaching this live and I can't rewind myself yet, but since this is a recorded session, you can rewind and you can get it, right? Yeah. So this is what I was just explaining, and you can go through these. You have the notes. I have already sent the notes, so you can go through this. I've already explained this. I've already explained. Yeah. So let's have an example. So you see this is the second touch, and we had this trend line. So here we can see that it has been intersected, and the candlestick has closed below. But this is on the 5-minute time frame, right? This is a 5-minute time frame. So what do? You go to the 1 hour time frame. So when we look at this on the 5-minute time frame, it shows, when we look at this on the 5-minute time frame, it shows that it's been intersected here. But when we need to go and confirm from the H1, right? We need to go and confirm from the 1 hour time frame. So let's see. So now this is the 1 hour time frame, and this is this point, and we can see here it just left a wick and went up. So on the 1 hour time frame, the candlestick didn't close below this trend line. So the fact that it didn't close below this trend line on the 1 hour time frame, regardless of it closing below this trend line on the 5-minute time frame, it means on the 5-minute time frame that was a fake breakout. So the 1 hour time frame has now confirmed that on the 5-minute it was a fake breakout. So instead of taking a sell to say it's going to change direction and start going down, we know we can take a buy, and it went up, right? I hope you get the point. So one more example using the 1 hour time frame. So now if you are trading on the 1 hour time frame, which time frame do you use to validate the trade? Is the H4. So on H1 we can see that the candlestick has closed above the trend line. It has gone beyond the trend line and has closed above, and it's really big. The body is big. So when we go to the H4, how is it? So this is the 4 hour time frame, and we can see here it hasn't closed above. It just left a rejection. So what do? In this case, you'd still take a sell, and boom, we can see price went all the way down until here. This is where it violated the trend line. So I hope now you understand the importance of checking using the 1 hour as well as the H4. So these are just some other examples, and we can see that. So common mistakes in trend lines. So we can see this is a trend line in a downtrend, and so you have 1, 2, third point you can take a trade, fourth point you can take a trade. This is a trend line. Here you can take a trade. So sometimes there will be a time when the market goes like, it will leave wicks like this. So meaning on a lower time frame, it was showing that it is a breakout. But when you go to the higher time frame, it is showing that it's not a breakout. So it will leave these wicks. So even as you trade, when you place your stop loss, it should be below. Leave room for this to occur in case it occurs, right? Yeah. So that is that about trend lines, and now we'll be looking more in details about the breakouts, but that will be a separate video. I don't want this video to be too long. So it will be a separate video, but it is a continuation of this. So that being said, ladies and gentlemen, I'll see you in the next video.